Gold is clearly on the rise and making historic highs. In this video series, we will cover the top 5 gold price drivers and reasons to invest in gold in 2024. To learn about all 5 reasons right now, plus a bonus, see the link to the full article in the video description. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. And is the steady erosion of your purchasing power putting your retirement at risk? How can investments in safe haven assets like gold and silver stop the bleeding? If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. Gold price driver number 3, world central banks buying gold in record amounts. The U.S. Federal Reserve's approach to increase the money supply and monetize the ever-growing national debt will in turn weaken the dollars being held by foreign national banks around the world. Given this fact, countries with sizable dollar reserves are increasingly converting their reserves into tangible assets such as gold. Nations like India, Russia, China, and Brazil are leading this trend by buying gold at an unprecedented pace, disrupting the balance of power between the East and the West. In years 2022 and 2023, central banks around the world have purchased more gold than any time in recorded history, according to the World Gold Council. In 2022 alone, central banks collectively increased their purchases by 152% to more than 1,100 tons. This was an all-time historic high. The council also expects this strong buying demand to continue into 2024. This mass increase in gold holdings and exodus from the US dollar as a central bank asset is not just isolated to the emerging and expanding BRICS nations. Polish and Dutch central banks within the Western nations are increasing their gold purchases as well. In 2023, the Polish central bank stated that they want to double their gold reserves to up to 600 tons. By amassing gold, these institutions are tactically positioning themselves to counteract potential losses that they perceive with the dollar in the medium and long term. If the smart money is buying gold for what they perceive as growing weakness in the US dollar, it only makes sense that the ordinary citizen prepare as well. This trend isn't just about hedging against inflation or economic instability. It's a calculated move to diversify reserves and reduce reliance on the dollar. Central banks are essentially returning back to the historic money status of gold, both as a form of diversification, a hedge against potential crises, and its scarcity of supply. Stated simply, central banks can't print more gold. The trend is clear. Central banks are no longer selling gold, they're buying it. They're reducing the supply on the markets, effectively driving up the demand and the price of gold. As the collective acquisition of gold increases and the reserve holdings of US dollars decrease among these central banks, this will gradually create increased inflation of the US dollar, as the existing supply will be exported from foreign nations back to the United States. Other international currencies don't offer a compelling alternative, as they are based on unconvertible fiat paper. The lack of a strong alternative accelerates this process of de-dollarization, leading to increased demand of gold and thereby weakening the dollar's position as the global reserve currency. Gold is the only true global currency that is accepted due to its time-tested trust and store of value. No other form of money has this legacy and has withstood thousands of years of countless economic cycles. Fortunately, this move away from the dollar will be gradual, which buys time for the ordinary investor. Simply put, buy low, not FOMO. Gold acts as a hedge against your losses in other income channels caused by the uncontrollable burden that is inflation. Gold also appreciates in price the longer you hold it. The reported measurements of inflation are one thing. The average lived experience by the regular everyday American is another. Please kindly leave a comment on your personal experience with the cost of living and its effects on your day-to-day behaviors. We will explore the next driver that will push up the price of gold in 2024 in the next video. Be sure to subscribe to this channel so you don't miss it. Also, see the link to the full article in the description below. If you're ready to get started on your gold investing journey, see the links to the free guides in the video description. Thank you for watching.